Hong Kong has always been an ideal place for companies to go listed, but the pandemic had not been kind to the global economy, including that of Hong Kong's IPO market. As everything starts to return to its place, Hong Kong strives to become the world's top listing destination once again. We are honored to have gathered a panel of experienced speakers representing a regulator, the financial sector, and the legal profession in private practice to share with us what Hong Kong, and in particular in-house lawyers, need to do to ensure the city is ready for the revival of the IPO market. Our speakers are Ms. Christina Bao, Managing Director, Co-Head of Sales Marketing, Hong Kong Exchanges and Clearing Limited. Mr. David Chang, Managing Director, Head of Asia Corporate Finance, Bank of America Securities, and Ms. Benita Yu, Senior Partner, Slaughter & May. Mr. Alex Au, Director, General Counsel, Corporate and Investment, Link will moderate this session. I shall hand the stage over to Alex and his panel. Thank you.
Right. Good afternoon. Thank you so much for returning. I see a lot of audiences coming back. We were worried for a bit that for the last session, people will probably have run away for the day. But given the attractiveness of our speakers and the importance of the topic that we'll be covering, so hopefully we'll give you a very meaningful hour to go. Very happy to be returning this year. Last year, I moderated a session of this in-house lawyers conference as well. Last year it was a bit weird because it was hybrid. I was moderating. I was the only one sitting on the stage with the speakers joining online. It's pretty weird. So really happy now that we can have a physical, discussion like now. Topic for today: gearing up for IPO market revival. Hong Kong has long been a leading listing destination until the pandemic has upended our financial market. Now that we're trying to get back on track, how does the market look like now? This is what we want to look into. And what can we do to capitalize on this, hopefully, upcoming IPO market revival? And what can we do to better help our businesses from the capital market perspective? So these are the topics that we would like to cover today. Speakers, as introduced just now, I probably would not repeat. You can read from the bio in your pamphlet, but I'm very proud to be sitting together with professionals and experts from different areas. A representative from our legal industry, from our regulator, from Hong Kong Stock Exchange, who just released a very great result today. Congratulations, Christina, and also David, representative from the banking industry. So I think to start our panel discussion, I would like to propose that we begin with revisiting and familiarizing ourselves with the Hong Kong listing regime and some historical reforms. And in this respect, who can be the better person to tell us all about these than Benita, whom I believe most of us in this room already know as our capital market guru in the legal industry. So without further ado, I will hand over the stage to Benita, please.
Thank you very much, Alex. I think we'd like to start with looking at some slides. And in relation to that, what I wanted to say is basically Hong Kong's success as a world-class financial center is in large part attributable to our thriving stock market in Hong Kong. And I think the Hong Kong Stock Exchange has done so much in developing the listing regime over the years in order to enable us to remain competitive, to attract listings here, and at the same time finally balanced against investor protection. And so that is actually also a very important element for investors' confidence in us. So looking at first of all, the history of really where we've been through, I'd like to start with the first slide, which talks about really all the reforms that we have actually been making over the years. So you recall that, and I think many of you would know, say if you want to list in Hong Kong, there are some financial requirements that you need to meet. And so everyone would be talking about, do you have a profit track record in Hong Kong? And a profit track record means you need to have profit to list in Hong Kong, right? And so this is the traditional starting point, and we've been practicing that for a long time. You need to have profits to list in Hong Kong. But you'll be pleased to see we've actually gone very far from that point in time when we first started, which is that it was then possible to list loss-making company, but having big market caps. And further, in 2018, you may recall the wonderful new economy companies listing regime that we brought about, or we saw, where biotech companies were now allowed to list without any revenue under Chapter 18A. And you also have the overseas issuers coming back for a second listing, giants like Alibaba under Chapter 19C. And at the same time, we started allowing companies with weighted voting rights to list here as well, and provided that certain criteria can be fulfilled. And then further to that, in 2022, you recall we had the SPAC regime introduced. These are the special purpose acquisition companies that came through after the huge success that one saw in the States. Again, non-revenue companies. And lastly, and not least, and of course you remember this one because it's only just happened, that we've now got a new chapter 18C for specialist technology companies. And so why are these so good? Now, just going through really some basic stuff, which I think most of you would know. So if your company wants to list, what does it need to do? And your first question, as in-house counsel to them, is, are we making profits, right? So that's the easiest way to list. So if you're making profits, and by that I mean for the last financial year, 35 million Hong Kong dollars, and then for the first 2 financial years in the 3-year track record period, a combination of 45 million, then you are able to list, at least meet the track record criteria. There'll be other requirements, but that is the key. So, but if you say, look, but we're not making profits, or the profits are not enough, then what? Then, as I said just now, develop the market cap test. So long as you're big enough, and so long as you're making revenue of more than 500 million Hong Kong dollars in the last financial year, and if you're big enough, you can list. So how big is big? Big is where your market cap is more than 4 billion Hong Kong dollars. Then you can list, even if you're loss-making, right? Now, if you say, well, I'm not as big, but I'm quite big, I'm more than 2 billion Hong Kong dollars in market cap. Yes, you can still list, but there's an additional criteria financially, which is that you need to have enough cash flow, which is an aggregate of 100 million Hong Kong dollars over the last 3 years. So has that worked? Now, if you look at this chart, you see that over the 5 years before 2022, when we looked at the reforms again, most companies listed via the track record, the profit track record, the blue bar chart here. And therefore, people who were able to use the market cap alternative tests weren't that many. And in fact, the middle one, which is a 2 billion market cap one, was quite rarely relied on. The 4 billion market cap one was more relied on. But maybe it's not enough to attract, and the reason is all these still require revenue. If you have no revenue, you can't come under any of these tests. Now, back then, there were still some narrowly defined places where you can actually come under to get listed without revenue. One would be the project companies, so toll roads and so on. So it was for a while quite popular to list these toll roads, and they won't have revenue, but they were gathering money to build a toll road. The other one is mineral companies under Chapter 18, but that's very specialized. And so unless you are really into those things, you can't list. Now, in 2018, as I mentioned, so the market reforms were catering for new economy companies. So we got these biotech companies, which were non-revenue, non-profit making companies. And also, as I said, the secondary listings of overseas issuers were allowed. And again, these might not need be earning any revenue. So we opened up our possibilities to the outside world. And of course, we also had the SPACs. Now, has it been enough? Then if you look at this chart, we realize maybe not. Because since 2018, when we had the reforms, and looking forward over the years, you'd see Hong Kong attracting how many companies in the tech space to list? It's not a lot. If you look at China, if you look at US, in terms of the red side, that's the number of listings, and on the right side, the market cap, we've fallen absolutely short of what these other markets were able to achieve in attracting the listings of good high-tech companies. So this is the background to why there was this further launch of the specialist tech companies. And interestingly, these cover various categories. But what I'm happy to mention is that while these very much overlap with the starboard categories for specialist tech listings in Shanghai, we went beyond. Those in red on this slide are those that the Hong Kong Stock Exchange have gone beyond what the current categories are in starboard: metaverse, food and agriculture, tech. These are what we added on to allow companies to list here. And the other thing is the exchange is open-minded. If you've got a specialist tech, but it might not really fit into these, you can still go and talk to the exchange. I think they're very open to discussing whether those could be allowed to be listed. And as I said, no revenue is required for these, provided that is big enough in terms of the valuation. So the market cap needs to be more than $10 billion. And that's already a reduced number compared to the consultation suggested, but it is a fine balance, again, to be achieved between allowing good companies to list and investor protection. Now, you might say, well, I'm already listed, so what's in this for me? Well, never stop thinking, because you can think about a spin-off for your company. And a lot of times people want to do spin-off because it will actually unlock the valuation in a particular business segment that's otherwise diluted by other business segments in the company. And doing a spin-off would actually release that and increase the value of the business segment for the listco. And you may know about the fact that there's a well-trodden path under Practice Note 15 of the listing rules to allow you to apply for a spin-off. And the exchange would focus on whether what's being left in the company after the spin-off is enough to continue to warrant a listing with sufficient operations and assets. And the other thing is that obviously the delineation between the spun-off business and the remaining business need to be properly done, that the two sides are done, are operating independently, operationally and management-wise. And lastly, also, you can think about listing elsewhere to top up your listing in Hong Kong, and that can actually give you a lot more exposure as well. Like we helped SMIC, not as a PLC incorporated company, but they managed to list in China by creating a subset of their share class called RMB shares, and just have those shares listed in China. So this has started a new structure where you can actually have an offshore company listed in China. And of course, there are recent, interesting dual listings like Ferretti having done their listing in Hong Kong, are also going for a dual listing and are listed, I think, in Italy now. So all in all, a lot of possibilities. Thank you.
Thank you so much, Benita. And I think it really helps, us to set the scene of our discussion, knowing about the background, our historical reform, including the latest 18C reform. Let's now turn into what's currently happening in the market. The Hong Kong market, I think it would be a good time can I invite representative from our exchange, Christina, to help us a bit about, the current market in Hong Kong. We can see that, after the past 3 years, the IPO market in Hong Kong kind of warmed up a bit with the recent market pickup towards the end of the second quarter. What do you see as the observed opportunities and challenges coming into the second half this year and into next year?
Yeah, thank you, Alex, and also thank you, Benita, for the introduction of all these listing reforms that we carry forward in the past few years, and indeed, actually, that has provided a lot of I would say incentives and also encouragement to the market, so that not just the traditional economy like consumer or real estate or the infrastructure, right, that we have seen sort of booming in Hong Kong, say between 2020 2012, and more recently is the new economy that really occupies the IPO space of Hong Kong. So in the past 5 years, if you look at the aggregate IPO fundraise on Hong Kong Stock Exchange, you can see that 65% of the IPO fundraise actually went to the new economy names, right? So if you talk about Hong Kong, trading velocity on a daily basis, now you're really talking about a much higher turnover contributed by the names like Alibaba, Meituan, along with the Tencent and all these new economy names. But looking at, probably starting from 2022, the global IPO market has been, under a lot of challenges, mostly due to the rising interest rates, the, inflation, expectations and so on. So as we all know, right, the cost of funding has become a lot, more expensive. And that actually, impacts the IPO market in a way that has not been, seen very, lately. That is, interesting because again, if you look at the cost of funding, you kind of question the valuation of especially the growth of stocks, right? So the growth stocks actually is a story kind of is like, on a annual basis, my growth could be, like 20% to 50%, even 100%. So if the cost of funding is relatively, well maintained, that gives you a, relatively high valuation, right? But now that the cost of funding has become like, 5% in terms of, the IRR, it could be even higher, right? So in that sense, with the volatility of the revenue or the cash flow in those growth stocks, it actually impacts very severely to the valuation of these growth stocks, which presents a new challenge for especially the new economy names, because these companies are well known for their growth stories, right? So that's actually is what's happening, globally, not just in Hong Kong. But even in 2022, when time was so, difficult, we managed to complete, 90 IPOs, in 2022, which is not bad, right, globally, because if you look at the US market, look at the UK market, or the general, EU market, the number is much slower. Smaller, right, in comparison. And the fundraise actually ranked, top 3, among the top 3. And the top 1, not top 2 is apparently Shanghai and Shenzhen Stock Exchange. And even in the first half of 2023, if you look at the total fundraise for IPO, right, globally, it's something like $75 billion in the first 6 months. And then 35 billion was contributed by, Shanghai and Shenzhen Stock Exchange. So what I'm saying is that the IPO market is actually changing, and is actually changing in a pace that's probably not seen before. And a lot of it has become a lot more domestic. It's not just the Asia market. If you look at the top ranking exchanges globally, you could see names that you have never seen before. It's like the Abu Dhabi exchange, right? It's like the Indonesia Stock Exchange, and so on. So what's changing is that indeed people are becoming a less risk on. So they're really looking for a home market that is more secure in terms of IPO sort of completion. And Hong Kong's advantage is that we provide the kind of liquidity that the domestic market can never provide, right? So the global institutional investors, the retail and the institutional investors from mainland China through Stock Connect, these are the investors we are able to provide to the corporates that are listed in Hong Kong. So, but now that we do see that there is a mismatch in terms of the global demand for China assets, and there's also a sort of a mismatch in terms of whether or not the domestic investors are happy to take on some for example the U.S. investors or even European or the Singapore, right? The investors sitting in Singapore or Middle East, are they happy to get more exposed to like a foreign asset these days, right? So that's actually the challenge, and that we have to kind of become a lot more, first of all, flexible, right, in terms of our practices. And second, I think it's also more diversified and more kind of a multi-pronged, right? Because we couldn't be like the one-trick pony that we only can support the Chinese companies to listing in Hong Kong, but we are also here to support a lot of the global names, right, to potentially list in Hong Kong, and also to provide accessibility for a lot of the mainland investors to access global assets. So starting from even 2018, right, we've seen a lot of the spin-off listings, not just from China to the other places, but it's more like global names are sort of spinning off their assets into China, into Hong Kong to list. So the examples include Budweiser, right, and Nissin Food, and all these names. So a lot of them have been quite successful. But coming to this year, I want to, actually, I was sharing with David that we're opening office in London, in New York. We already have office in Singapore. So it's trying to be global, has to be multiple ways, and we're trying to be, there for the market and then try to capture the opportunities in different manners. And then I want to also stress that in terms of sectors, we still see a lot of interest from, the corporates, right? The demand is still there. Demand for capital raise is still there. It's just the demand for, getting more exposed in this capital market for IPO is kind of subdued at this moment, but it's work pick up. And we already see like over 100 active filings on the exchange. So that actually indicates interest for consumer, for EVs, for ESG related sectors, the metal minerals and so on. And then of course the biotech and the healthcare, all these names are still quite relevant to Hong Kong market, and Hong Kong market can still provide like a very strong competitive edge to support them to keep growing and to be a lot more competitive globally.
Right, thank you very much. I think both Christina and Benita, you've mentioned about kind of comparing, what different exchanges can offer. In this respect, can I maybe ask for your opinion on, what are the key areas that potential issuers would consider when they consider a listing, whether to go to Hong Kong, Shanghai Stock Exchange, or elsewhere? Can I maybe direct this first to David? I mean, from your perspective as a corporate finance advisor, as an investment banker, what do you usually advise potential issues to look into? And then maybe afterwards, can I invite Benita to also share with us how you advise clients in this respect?
Yeah, thanks, Alex. I think this is a very common question. So when an issuer come to us and say, which venue should I consider for listing my company? I think there are 4 buckets of factors that they typically look at. I think the first one is regulatory requirements. I think Benita already, lay out, the regime of Hong Kong Exchange. And they also consider the vetting process. Overall, I think compared to other major international exchange, I think Hong Kong tend to be slightly more stringent than other exchange in both aspects. But having said that, given that our goal is to attract high quality like companies to list in Hong Kong, I can see a good reason to set a higher bar than other exchanges. And the second regulatory aspect is the post-listing requirement and compliance costs. On the requirement, I think Hong Kong sort of compare on par with other major exchange. On cost, indeed, Hong Kong, compare more favorably with many major exchange, particularly US. In US, they have like quarterly financial disclosure practice. They have Sarbanes-Oxley requirement. They also have a high litigation exposure. So all this, Hong Kong actually compare much better than other exchange on post-listing. The second bucket of things are comparable company and valuation. On comparable companies, I think the Hong Kong exchange is very matured. We already have a lot of company coming from different sectors to list on Hong Kong exchange. But having said that, for the very highly innovative, business model or highly innovative, companies, based on historical data, the US tend to be front running the Hong Kong slightly on this aspect. But having said that, Hong Kong exchange has a very good track record in attracting this sort of company come back to list in Hong Kong, create a cluster, as seen in the online gaming sector, education sector, biotech sector. Even though we sort of missed out like in the first batch, but eventually we sort of like catch up, quite successfully. And in terms of valuation, well, as a matter of fact, when a company do their valuation or investor do their valuation, as an underwriter, we typically guide them to look at global comps, regardless of the listing venue. But in reality, an issuer sometimes find it easier to sell their stories and fetch a higher valuation if they choose to list in a venue with more comparable company and more investor familiarity with the business and high valuation. I think so far, you look at like 2023 price earning multiple. I think US has been outperforming all other markets, and US is now trading as between 21 to 37 times PE compared to Hang Seng Index of 10 times. And the third thing they look at is aftermarket liquidity. Hong Kong is very liquid, compared to many exchange, except for US. I think in terms of average daily trading volume as a percentage of market, US still perform slightly better than Hong Kong. And the last one is geopolitical risk. I think many issuers nowadays also factor this into their consideration. And for many Chinese issuers, they basically shy away from US market already because of the geopolitical uncertainty that they perceive.
And I'd like to cut it a different way. So everything David said is so valid. I'd like to look at each jurisdiction. And so like starting with Hong Kong, I think the key thing here is that we have a certainty of process. It's transparent. If you meet the criteria, you get listed. And it's certain. Also the liquidity, as mentioned. On the other hand, vetting may be a bit more cumbersome than some others, but then, it's for our own good, because at times we haven't asked that due diligence question. The exchange in the vetting would ask it, and we said, what a good question. So let's have the answer. So it's actually, a good thing for us. Now, if you look at PLC, obviously valuation is normally seen to be higher. And therefore, if you want to have a higher valuation, people might want to delist from Hong Kong and list in China. In fact, that's really what's been happening for a lot of these take private. Eventually, they would like to list in China, in my mind. But China has got this issue with the uncertainty of the listing process. The A-share approval, you've heard about the long queues. You've heard about people waiting for a long time and not really knowing where they stand. And so that is a huge thing that would impact on the decision making. And for the UK, it's simpler vetting. But in the past, for Chinese or Asian businesses listed on the UK, the problem is liquidity. So this goes back to David's point about investors' knowledge and where your investors are. European investors, are they interested in trading stocks in China or businesses of stocks of businesses in China? So that somewhat hampers the UK's attempt to attract Chinese companies listing on the London Stock Exchange. Now, US, we all know, simpler vetting, because really buyers beware, they don't really vet you as much. So the process is easier. There was one time a banker making this comment to me when we were doing a dual Hong Kong US listing, and they said, look, so Hong Kong is only 10% of the deal because you only slate 10% of the global offering for the Hong Kong retail offering. The 90% is international, including US. But the work is 90% of the work because of the way the vetting is so much more hands-on at the Hong Kong regulators, whereas in the US they are far more hands-off. But is that a good thing or bad? Maybe it's not necessarily a good thing, because then you are exposed to US litigation risks. And because this is the way the market runs there, if something's wrong in the disclosure, the regulators don't come to you, but the investors will just sue you. And so that's the US. And lastly, Singapore, again, is very simple vetting. I think they're very competitive. But what I understand is usually valuation is lower, and therefore people might not, want to go to Singapore for that reason.
Right, thank you. While we are comparing listing in Hong Kong and certain other overseas exchanges, we've covered mainly on what happens pre-listing, what kind of considerations you would put into regulatory requirements, etc. David has raised as one of his points what's happening post-listing. And in this respect, I would like to maybe ask our speakers to share a bit on what's happening post-listing, namely what our capital market can offer to our businesses that has listed in Hong Kong. So when we talk about the capital market, we'll see that recently, after the pandemic, we can see that the US, European capital markets kind of start to slowly coming back. But the Hong Kong market still looks relatively sluggish, if I may. What do you think are the key factors considered by international investors in investing in the Hong Kong capital market? Can I maybe ask David to share from his perspective first, and then obviously also Christina?
Yeah, thanks, Alex. Well, indeed, the recovery of the IPO market in EMEA or in US was mainly driven by the strong rebound year to date, in the relevant stock market indices, and they are led by mainly the high growth company, the tech company in particular, and because of the secondary market improvement, is also like improve the investor sentiment towards all types of capital market transaction in those areas, and in turn, it's led to a revival of the relevant IPO market. For Hong Kong, I think Hong Kong has a high beta correlation with China. And unfortunately, so far, the economic data from China tend to fall short of expectation. And when we talk to many, like global investors about, buying into the Hong Kong IPO market, many of them are telling us that they are still like cautious. They are still, monitoring like development of certain things. For example, they are looking at the efficacy of some of the stimulus rolled out by the Chinese government. And also they are looking at the global economic or political development, particularly for next year. They're looking at the election in Taiwan in January, the election in US in November. They are also closely watching the US-China political development, and also they are also speculating when the US Fed interest rate is going to pivot. So I think, overall, I think we are still hopeful that the Hong Kong market will come back. If you look at, what happened in the Europe or in the US, what I think will help a recovery in Hong Kong will be, firstly, we hope to see a strong rally in trading volume, in price performance of existing listed companies. And then after that, if we can have a handful of very successful large cap IPO in Hong Kong with very strong market performance, then I would expect the Hong Kong IPO market to strongly come back. And another thing is that like we have seen some recovery already in the US and in the EMEA IPO market. And when valuation get to a certain point, I think some of the investor may start to look outside of US and Europe. And Hong Kong definitely will be one of the market they definitely will want to move money into.
Yeah, maybe I can just add a slightly, different angle from the secondary market perspective, right? When we talk about, foreign investors trying to shy away from, investing into China, I usually would look at one data, which I think is really, really useful for me, right? You probably have heard about Stock Connect, right? Stock Connect is not just enabling mainland investors to, directly participate in trading of Hong Kong stocks, but it also allows, foreign investors to kind of use Stock Connect to invest in Asia market. So we usually would look at what we call, foreign investors going into invest in the mainland market. We call it northbound, the northbound investment, right? So on a daily basis, right, the northbound actually trading volume is something like 104 billion RMB, right, in the first half of 2023 this year, right? So that is not a small number because it actually accounts for roughly 5%, right, of the total trading volume of China, right, on a single day. And in addition, it's actually going up, right? It's not really coming down. So the funny thing is that we all talk about money moving away from investing in China asset, but I think to some extent they're investing directly into China through Stock Connect, and sometimes they probably not use Hong Kong as the proxy market to invest into the China market. So one thing I think we should really build up is to try to offer a bigger variety of China assets in the Hong Kong market, so that the foreign investors would still consider Hong Kong like a major component. So I also want to use another reference point is that on a daily basis, the Hong Kong market trades approximately 120 billion Hong Kong dollars. So it's actually very, very close to the 104 billion RMB that is being traded through Stock Connect in northbound, right? Stock Connect into the mainland Asia market. So what I'm saying is that already constitutes a very major sort of contribution to that market. So what I'm saying is that if Hong Kong can actually offer like the specialist technology companies in Hong Kong with a smaller market cap, but a high growth story, that could be a lot more interesting for some of the foreign investors, right? If we could offer, spin-offs of, some of the major companies, in automobile, manufacturing, that they're building their EV business, and that can be a, separate listing in Hong Kong. Again, that would be very interesting for some of the foreign investors. So, adding the sort of investable assets to the Hong Kong market, I think is extremely critical. And second thing, I think also matters a lot. I think David is right that, some people have certain concerns about the growth trajectory, right, in China economy. But, there's nothing we can do about it. We all have to wait out for this period of time and for things to gradually emerge from the uncertainty, and eventually people, investors hate uncertainty, right? As long as some of the air is cleared, I think they'll always be coming back, because it's all about relative returns. I was talking to another exchange, a peer exchange this morning, right? And they were telling me that they were talking to one European investor who has shared with them they only invest in emerging markets, because they don't really see the similar kind of growth potential in the European market or in the US market. So they build a fund, just to specialize in emerging market investment. So there is investors, the bunch of investors who will be happy to see that kind of growth, and all we have to do is to wait out. And the last thing about, the Hong Kong IPO market, I think, which is also relevant, is really the, how can issuers and investors can come into terms with the sort of a valuation, right? Because a lot of issuers are still kind of, stayed in the past, right? They're thinking about, in 2020, 2021, when they come into the market, what kind of, PEs or even PS they can get in this market versus today. The world has moved on. So even, when I travel to ASEAN, right, when we're talking to the unicorns from local market, they're saying that, what they're doing is that, they're trying to kind of, discipline themselves in terms of what kind of investments they want to make in the next couple of years, partly because of all these different dynamics that are going on. So I guess the corporates also have to kind of readapt to this new, environment, and, they just have to prepare for not just a good time, but also for the bad times. And if you look at the companies, we talk about 18A biotech companies, and all these, companies who have already completed a Hong Kong listing feel very lucky, because if they come out today, they may not be able to have the same, appetite from the investors, right? So it's not just about whether you can, reach to a certain valuation, but it's also about a good timing to come into this market and to be available in this market, so that you have a sufficient sort of sources of capital raise going forward. So that kind of flexibility is actually extremely important in such a volatile market as of today.
Right. Thank you so much. These are also helpful. Well, now before we move on to the next topic, I've actually got a special instruction from the organizer of the conference. We have a special guest speaker who will join us now for a very brief sharing, both on our topic and also generally on how corporate lawyers can help in the development of, within mainland China. This morning we have heard that the president of the Beijing Lawyers Association joined us early this morning, and now we would like to invite him to give us a bit of a sharing. If you guys don't mind, I will switch a bit to Mandarin now. 那今天早上我们在线上是由我们高子成会长，是我们北京律协的会长，是参加过我们会议。那现在我们是就是非常荣幸，就是请到高会长跟我们做一点分享。那我们现在先有请高会长，谢谢。
To be here, sorry, I cannot speak English, so I only speak Chinese. 今天上午我参加了你们这个活动，我看到美丽的女主持，接着我看到陈会长上去致辞，接着呢就是两位女主持和一位男士，这三人行吧。 那个系统的原因啊，我看到你们在讲在说，而我在置身事外进不去这个系统，操作的原因，我们对这个技术还不熟悉啊。总之呢，我特别关注你们这次企业律师年会。企业律师在内地呢叫做公司律师，北京律协特别重视公司律师的工作，因为这个律师行业有大量的公司律师，也有一些公职律师。这些律师呢是协会的这个组成部分，是北京律师行业的很重要的一部分。公司律师或者企业律师，他对于职业律师或者社会律师，在职业过程中如何更好的给企业服务。他们可以给出一些特别的经验，一些内在的机理，比如说社会律师如何去竞标，如何更有可能中标，如何更有效的为企业提供服务，如何更好的获得企业的信任等等，这些都是公司律师所具有的专长。北京律协成立的两公律师工作委员会，其中就包括公司律师，也就是你们所说的企业律师。所以我对这次活动特别重视，也想通过参加你们这次活动来了解香港企业律师目前的工作状态，以及与职业律师之间的互动关系。当然，我也希望职业律师能够为公司律师或者企业律师提供力所能及的一些借鉴。一些帮助，从协会的角度也希望能够为企业律师提供一些帮助，当然也更希望企业律师能够为行业、为律协贡献一些独特的智慧。但是呢，错过了这个机会，我相信今后还有机会啊。我想请你们4位代表我，向陈会长表达我诚挚的问候，也特别的通过你们向香港律师会的各位同仁，表达问候和良好的祝愿。我特别的邀请你们，来北京律协参观访问，来内地合作交流。因为内地的巨大的市场，对于香港律师而言，我觉得还是有巨大的合作的空间的。同时呢，内地律师北京律协也特别的珍惜、特别的关注香港律师涉外法律服务能力，特别希望借助你们的具有特长的涉外法律服务能力来提升内地律师的涉外法律服务能力，包括自身在一线的服务能力，也包括善用国际律师资源的能力。这2个能力对内地律师而言都是欠缺的，我们迫切的希望补齐这个短板。这个我希望这些诉求或者这些愿望，在今后我们不断的深化和扩大交流的过程中，能够相互借鉴，能够取长补短。我相信我们的合作空间非常之大。时间关系啊，给我的时间是5分钟，所以我就再一次表达我的真诚的愿望。恳请你们，邀请你们在你们方便的时候来北京律协参观访问，我们进行深入的、广泛的交流。我希望我们有更多的广泛的合作空间。谢谢大家。
好，非常感谢高会长。Thank you, President Gao. Now returning to our topic about, returning to our IPO main topic. Okay, we talk about mainland China a lot of time, but then Hong Kong Stock Exchange does not only serve China, we serve the world. That's our goal, right? So let's talk a bit about foreign stocks. I mean, we have seen a wave of Hong Kong IPOs by overseas businesses. In the last decade, there have been a lot of such IPOs. But there haven't been many of such listings on Hong Kong Stock Exchange since then. What do we think are the major challenges in convincing overseas businesses to consider listing on the Hong Kong Stock Exchange? Maybe can I ask David to give us some thoughts?
Yeah, thanks, Alex. I think, if you look back, back in like 2010, 2011, there were quite a number of companies from overseas, truly overseas companies listed in Hong Kong. But some of them already listed, mainly because of the lack of liquidity. And the reason of the low liquidity partly attributed to some of them being secondary listed in Hong Kong. So when a company is still listed in two exchanges, the trading over time tend to gravitate towards the primary market, so leaving the secondary market being an orphan. And for some of them, the withholding tax issue also undermines the liquidity. And another thing that when we pitch overseas company to come to Hong Kong to list, typically the first question they ask will be, what are my nexus to China, meaning that what was my revenue exposure in China? If there's no nexus to China, why should I consider listing my company in Hong Kong as opposed to a listing venue where majority of my business are domiciled? So this is the second thing. But I think overall, I'm actually hopeful that there will be more overseas company coming to list in Hong Kong, particularly with the effort that the exchange has done since 2022. I think there are three things that exchange I think have done remarkably. The first one is the regulatory aspect. I think they have amended the listing rule. They now streamline the standard of investor protection to make it a uniform standard applicable to all overseas company. They also codify lots of common waiver for overseas company to list in Hong Kong. And the second aspect is the marketing front. I think the exchange have entered into MOU with Saudi Arabia, with Indonesia very recently this year, and I know that they are also working towards getting more Vietnam company to list in Hong Kong. So all these are very positive. And once there is a cluster of overseas listed company built up in Hong Kong, then I would expect more research coverage on those companies and then more secondary trading. And what we want to see is an ecosystem created for this sort of overseas listed company in Hong Kong. And with that ecosystem, then hopefully the Hong Kong market will evolve from a China-centric market to a truly international market for all types of overseas issuers. Thanks.
Thanks, David. I think another aspect would be Stock Connect, right? Now that foreign stocks would be eligible for the Stock Connect program. Do we expect, Hong Kong can, through this Stock Connect program kind of revive the interest from overseas issuers, and how do you think we can do that, Christina?
Well, I think, I just want to sort of talk about this from the perspective of the issuer, from the corporate, right? If you are a corporate sort of domiciled in another country, right, so to speak, why would you want to go to Hong Kong, right? So in terms of, global listing, it has not been, sort of for everybody. It doesn't really work for everybody, right? It has to be working for a certain group of potential corporates, number one. And number two, if you look at the so-called global exchanges, there aren't that many global exchanges, right, in this world. So there are probably, NASDAQ and New York Stock Exchange and London and then us. And then if you look at the, New York Stock Exchange or the NASDAQ sort of IPO fundraise on an annual basis, roughly, right, it ups and downs, right, but roughly 20% to 30% of it actually is contributed by foreign companies, and about 40% is from China companies, right? So if you think about that, it's not really it's interesting because a lot of the Chinese companies cannot get listed in the domestic markets. Therefore, they would go to the US for listing. But then the rest of the US foreign listings that are very, very concentrated on Americas, like the Mexican companies, Brazilian companies, Canadian companies, followed maybe, right, by EMEA, but that's only like 15% or 10% or something like that. So what I'm saying is that if you think about Hong Kong, how can we actually make it more global? We still have to establish the relevance. It cannot be just randomly any company think of, I think Hong Kong might be interesting, right? Let's go to Hong Kong. So what is the relevance is an extremely critical question that we have to answer, right? And then I think number one, for sure, Stock Connect, right? For any company that seek for an overseas listing, usually the company is not all that happy with the domestic listing for some reason, right? Because they have limited, say, investor base, or the local capital market, mechanism is not well developed, or the listing rules are kind of not quite there yet, or the investor base is just domestic, one thing or the other, right? So we have to kind of get to the several layers down to figure out exactly what may be interesting for that company to consider a foreign listing. And then when it comes to foreign listing, then what type of liquidity or what type of investor base they're trying to seek, right? It could be US, or it could be European, it could be Hong Kong. But why Hong Kong is so different? It's because it's the only global exchange can offer both global liquidity and China liquidity. We all know that China still has a pretty stringent capital control for all the right reasons, right? And then then it's impossible, right? Because for any foreign company to just to think of, oh, I should do a roadshow in China, right, to talk with the China investors, and therefore they can invest in my company. That doesn't happen, right? Because they cannot really do it, freely. Therefore, we have to find a place where people can meet, right? And that place is Hong Kong, right? Then companies can come and list in Hong Kong. Therefore, the mainland investors can use the stock connect to invest in that company. In the meantime, you're not losing the global liquidity because the US investors, European investors are still in Hong Kong, right? But you have the incremental captive market of China domestic money. And then that's something that you will never be able to see in any other place. But if we couldn't really kind of broadcast it widely enough, or with a clear focus to establish the relevance, it's not going to happen. So that's why we are building this relationship in ASEAN, because as I said, geographical proximity matters. People are not going to kind of waste sort of wake up every midnight to deal with their foreign listings, right? They have to find a market where the time zone is relatively close, so we actually make sense to the ASEAN growing economy, right? And then even because we're talking about IPO, if you're looking at other more mature market or developed markets, almost all the quality assets are already publicly traded, so they have a less appetite for incremental growth. But in ASEAN, it's actually at the very starting point where we can actually capture the opportunity. And same with the Middle East and other emerging market that may have a closer tie with us. But there's, that doesn't really prevent, the European companies and even the American companies to consider, Hong Kong, exactly for the particular reason that David mentioned, right? The geopolitical considerations. How can you actually try to, stay in China to do business in China, while trying to maintain like, a profile where, the parent company doesn't really get too much exposed. Right. And in that way, right, you can potentially do a spin-off listing in Hong Kong. Therefore, the spin-off vehicle is a self-sufficient in terms of capital raise, in terms of R&D, right, in terms of a lot of the operations that they have to deal with. So all these actually are extremely interesting, topics that we should be, able to, carry with the potential issuers, corporates from the various jurisdictions. So I'm actually very hopeful, but it's not easy, right? For all the things that you mentioned that, it's 90% of the time is spent on Hong Kong listing, the vetting and stuff. And if it's a foreign listing, it will require another doubling the effort, tripling the effort because of different jurisdictions, different rules and laws, and when it comes to the operations, right? So there's so many things to work on. But what I'm saying is that now we're dealing with a market, where there's no easy money to be made, right? You just have to be a lot more hardworking and a lot more smart in order to capture our share of the market development.
Right. Thank you so much. I mean, we have covered in length on the challenges we're facing. How do we compare with other fellow exchanges? How do we fare in Hong Kong? Can we maybe to wrap up? I'm conscious of the time. To wrap up, can we maybe talk a bit about going forward? What should we do? As the exchange from the regulatory perspective, from the as advisors, what we can do further to help the Hong Kong IPO and capital markets. Maybe some last words of advice from each of you. Maybe can we start with Benita first, and Christina, and then David?
Sure. So I've seen clients who I helped list 20 years ago, being a small company, growing to the largest in its industry today. So really the possibilities for, accessing the capital markets and growing after listing is huge. IPO is only the beginning. And I think really what we as lawyers want to do is to know the rules well, know the markets well, know the clients' need well, put all of them together. And I'm sure we will actually have a better tomorrow.
We have always positioned ourselves as the super connector between China and the rest of the world. And I think that will continue to be the case, right, in the coming years. But when we talk about connectivity, it's not just the connectivity in terms of hardware, for example, like the Stock Connect, where we can facilitate the trading, but it's also about connectivity, across border in a lot of the software, right, the software parts. For example, right, like the foreign investors access to China corporates, or vice versa, right? The China investors access to global corporates, right? So these kind of dialogues need to be held. And we as an exchange is not just about, trying to get the infrastructure ready, but we're also trying to create like a, market space that hopefully that people can communicate better and can exchange ideas and can exchange all the, wonderful growth opportunities, by working much closer with each other.
Yeah, thanks. Indeed, I myself is very optimistic that the Hong Kong market will come back, given the cyclical nature we have seen in the past. Indeed, this year we have seen a very strong, pipeline of China-related company start kicking off their IPO. They're just waiting for the market. And in terms of foreign companies, what we have seen before the pandemic was that many MNC are considering to spin off their Asia or China business to list on Hong Kong. And once the markets come back, and I'm sure that those things will back onto their agenda. And so myself, I'm very optimistic, on the prospect of the Hong Kong market.
Right. Thank you so much for the very valuable advice and sharing. I don't think we have time to take any questions from the floor, but feel free to contact them directly. Sorry.
Just a quick one.
Please.
The reason why I want to ask this question is the Law Society has recently actually visited Dubai. As you know, it's the DIFC. I think they're very much talking about whether we can do a sort of like a second listing in the market or even vice versa. So I think Belinda and Christina, you mentioned about this before. So how do you see that? Is it we are competing with them, or basically we can actually collaborate with them in the future?
Yeah, definitely we should collaborate with them, right? Abu Dhabi as well as Dubai. Dubai has apparently DFM, and Abu Dhabi has ADX, and these are all potential partners. Actually, I visited them just in late of April, so I think definitely there's a room for growth. And apparently ADNOC, right, that is listed on Abu Dhabi Exchange this year, is one of the largest IPO so far this year. And why it makes sense for us to collaborate is because apparently the local markets offer the local investors, but we all know that they have deep pockets for sure, right? But on the other hand, they also want to be seen as a kind of a company with global standards in terms of corporate governance, in terms of a lot of other aspects. So coming into Hong Kong makes sense to a lot of them, that will enhance their global standing in many of amongst the investors, and the investors feel a lot more confident, and information disclosure and stuff will all be kind of more aligned with the international standards. So definitely, I think there'll be a lot of room for collaboration. And also, if they can prove that, the companies themselves are fundamental-wise are attractive, right, they'll be, very appealing for a lot of the Asian investors, including China investors.
Right. So I think we can wrap up the discussion for today. Feel free to contact the speakers directly should you have any further question or other matters you want to discuss with them. So thank you very much again.
Thank you all, and please stay. May we now invite our Vice President, Mr. Roden Tong again to present you a souvenir on behalf of the Law Society. Roden, please.